Economist Stephen Moore joins me now. All right, Steve, look, we got a pause in the bombing. That's all good news. But we still have relatively high gas prices. You're still close to $4 a gallon. And you've got interest rates at relatively high levels. So what's the outlook for the economy now?
Well, it certainly is weakened, no question about it. I remember when we started the year, Stuart, I told you on this show I was super bullish. And look, I do remain super bullish for the medium term and over the next couple of years, but we're in some tough sledding right now, no question. And by the way, who would have ever thought the market would be celebrating $90 a barrel oil? And that's what the market is celebrating today, because it went up to what, as high as $110 over the weekend. And so I think it's important for people to remember that before the Iran situation began, we were at about $55 to $60 a barrel. So there's a lot to come down, right? And as it comes down, whether that's going to be in 3 days or 3 weeks or 3 months when the straits are open, then we will see a resumption of oil back in the $55 to $60 range. And that's very, very bullish for markets. It's just a question of how long it takes. Now, in direct answer to your question about what's going to happen with consumer prices, we're going to see a bump up, no question about it, over the next 4 or 6 weeks when we get these new reports. We could see inflation go up to as high as 4.5%, but it's temporary. It's temporary.
How long do you think it's going to be before diesel starts to come down? I've got diesel averaging across the country at $5.28 a gallon. Yeah. That's really hurting farmers and industry and manufacturers. How long before that comes down?
Yeah, truckers aren't too happy either. I was talking to a bunch of truckers the other day. They're saying it just raised their costs for everything they're doing. Well, the price of diesel will come down with the price of gasoline, no question about it. And they run parallel. Right now, you're seeing very high prices of diesel, which is the major transportation fuel for industry. It'll come down when you get the oil supply going. And again, I said this last week, but it just bears repeating. There's no supply problem with respect to global oil production. In fact, the world will be awash in oil and gas as soon as we get this situation resolved in the Middle East. You're going to have Venezuelan oil, you're going to have South American oil, you're going to have, America is producing records amounts of oil and gas. I said this a few weeks ago, I want to repeat it for people who missed it. The United States today is a net exporter of oil and gas. We actually produce more oil and gas for the first time in 50 years, thanks to Trump's drill baby drill policies, than we consume. So there's no supply problem. It's just this temporary situation in the Middle East, which will be resolved. Trump will be victorious, and we will be back. Then I'll come on your show again and say I'm super bullish when that happens.
I have to tell you that I've been in touch with some colleagues and sources overseas over the weekend, and there was a sense of panic because their energy supplies are running really low and they're really worried about inflation. So I wonder if this pause was a response by the president to alleviate the panic that's being felt around the world. Last word to you.
Yeah, I think that's right. I mean, but remember, what's the old saying? It's always darkest before the dawn. And I'm telling you, the dawn is right around the corner and things are going to get better. And that means, maybe buying stocks right now at relatively low prices, given where we were, might not be such a bad idea.
That might just happen too. Steve, thanks very much for joining us on an important day. We take it. Thanks very much.